Okay. Alright, how you going there, guys? Good afternoon. Let me just turn my music down a little bit. Now, welcome to the TradeSetup live stream for Thursday. It's the, 5th of October. So we're kicking along nicely. Today, I haven't actually checked the market just recently, but I think it's down a few points, probably closer to break even than anything else. Market's getting a bit choppy at the moment, so just the usual, more range trading than anything. The US continues to drag itself high into new highs last night, although it wasn't such a big night, so we'll have a bit of chat about that. We've got the US payrolls for anyone that follows numbers out of the US on Friday night, which is quite a big figure. It's one of the biggest figures, most widely watched, I think. So we might get a bit of action tomorrow night. So I think trading is going to be a bit light on until then. There's no other, no news flow that's going to trigger the market either way, you'd think, between now and then anyway. So it's only really tonight. Then that'll kick off tomorrow night. I think it's at, I don't know, there's daylight savings change at the moment, so I think it could be around 11:30 tomorrow night, our time. Melbourne, Sydney time anyway, not the Queenslanders. So that could be a market moving number, just depending on how it comes out. So if it comes out quite strong, then obviously there's a good case for rate rise in the US, although it's pretty much all but factored in, I'd say. But if not, if it comes out really weak, then that could really give, really take the head off a rate rise, which could in turn kick the market up a bit more. But we'll see. Yeah, but anyway, what we're going to do today is have a bit of a look at, obviously, just the markets and what's happening. ASX is, one day it looks great, the next day it looks pretty rubbish. So it's just really that choppy price action between support and resistance. Going to take a look at it. I think it would be interesting talking about. We've got two stocks we've had. We just got stopped out of WGX, another gold stock, which I thought at one stage they were looking quite good, and gold was looking good, and then turned around and headed south as the market kicked off. We'll take a look at that. And like another technique we're going to start looking at a bit closer of, I mean, we use it all the time anyway, but more to do with our alerts about just to refine those exits. Because generally when you're right, you're right. Things will just go higher. Like we've got one that's kicked off strong today, CAN. I think that was triggered yesterday or maybe a couple of days ago, and then it's kicked off strong today, just took off. So, and another one that's actually kicked off as well. So when you get them right, you know it pretty quickly. Your timing's right and everything like that. But when you get it wrong, you probably get a bit of a heads up, and there's reasons to just tighten your risk up a bit or look for key indicators that, okay, this could lead to a deeper correction and potentially stop us out. So it's worth having a chat about that. And the other one's Qantas. Now, I know if anyone's following us quite a bit, we've been a bit negative on it, and there's reasons for that. But then as it just did not play out, the case actually added up for a nice little long, and we took that yesterday, and that has just spiked up through that key resistance zone today. And we know that, yeah, we'll take a look at that. Actually, we'll get into that in a second. So before we discuss it too much, let's get my little head on the screen. I know how important that is. And we'll get rid of that. And we are up and running. All right, so market's up 13 at the moment. So ticking along okay. Nothing too fancy, and that's probably about in line where the SPY finished last night. SPY was up a few points from yesterday's close. And it's done that time and time again. Every time we're down, it ticks up overnight, follows the US up. We open up there, then tick down again. So it's pretty much where yesterday we traded down to a key support zone on the SPY 200 and just bounced off that. And I expect a bit deeper correction off that if we're going to do anything. I don't expect it to blast through it just yet. If it's going to at all, it could just that's your range, touching the bottom of the range, head higher from here. So it's pretty much right where about 15 points up on the ASX is about equal to where the SPY finished overnight. So nothing too flash. Again, we're probably just all waiting to see what happens tonight, and I think the US is going to wait around until the numbers out on Friday night. Other markets are looking good or bad. We'll just see. Dow Jones, again, new highs. Not a big night last night. Obviously, it's extended to the upside, so this could just keep grinding out. It might just tick on a bit higher, have a bit of a pullback, build a higher low, and then go again. Just continue that same price action before. There's already talking about upcoming earnings in the US. So they're sort of gearing up for that now. So it just ticks away from one thing to the other. But there's no, there's nothing that's going to drop this market at the moment. I just think it's going to be one of those outside, not black swan, I'd say, but one of those things you can't see happening. That's because everything like North Korea didn't really do too much to the market. All it did was give buyers the opportunity to buy on a pullback, and this market to continue higher. There's going to be people short in this market trying to second guess it, and they're just getting continually washed out of the market. So until we don't get any more short sellers coming to market, it looks like it's just running out of steam. It may have a deeper correction, but again, we don't know when that's going to happen. It's all guessing, really. That's the S&P there. It's kicking along nicely. It's the FTSE and the DAX I want to take a quick look at. The FTSE's popped up, and it's potentially just, let's look at the last year, it's just popping up through these highs at 7,450, which is it could do, if you look at the recent price action. Let's just draw that. Does anyone trade the FTSE at all? Have a bit of a dabble at that overnight? Whether they intraday trade it or however you do. It's actually interesting just what we're seeing here. So we've got, you ever go at that one, Frank? I know you don't actually. I don't think you do. And you can see that it looks like it could be a bit repeating, and you can see where the market's come from oversold right up into overbought territory. So it's getting a bit stretched up here. This could be a washout of that 74.50, and then we head south again. But it's still in context to this move down, which is still above that 7,100 on the FTSE. So what I would more likely expect, what this might be setting up to do, it's washed out here. People are looking at it's the same type of price action what we saw previously. Washout led to a good sell-off, so you might get a few shorts stacked up there, but it may fall short. It may fall short and build that higher low, which would be nice to see around 73, 73.50. If it builds that higher low, I think that's going to take us up and through into new highs, through that 76 on the FTSE anyway. It's going to be interesting to see how that plays out in the next few days. I know they've still got a few Brexit issues and what's happening there, which could put a bit of pressure on the market. The DAX. I wonder if we've got the S. I'll look at the DAX. I wouldn't mind. What's that one? That's not it. The stocks, the Euro stocks 50. I don't know the code for that, actually. I don't think I've got it here, which is a bit strange. But anyway, we'll look at the DAX as a proxy. That's kicking up into those highs, so it is overbought up there. It's getting a bit stretched up there. No reason why it can't punch through. But when markets are sort of stretched in a key resistance zone, you expect more of either a washout or it to react off that zone and then build a higher low and then go. You wouldn't expect that just to blast through. It takes a lot of effort, in a very strong market. I don't think this market is super strong to be able to do that. So that said, all the markets are looking fairly stretched, but again, no reason to go in and short it. Now, the XJO, let's take a quick look, see what that's doing. Well, look, the thing is with this market, it still is holding those high, lower highs, and it's sort of touching down, washing out ever so slightly, that 56. It's touched it a few times now. This thing could easily blow through that on the ASX and then bounce, but it's just looking to me, if you're going to put your money on each way, one or the other, I'd be betting, if I was a betting man, I'd be betting on the downside, a move down. Even if at the very least it's got to blast out those, because it looks quite obvious, it's going to take out those short sellers. Even if it just washes them out with a good correction, they all load up and sell into the market and then turns around and retraces, which you can easily do too. It's going to be interesting to see how all this plays out. Everyone's sort of banking on a bit of a US correction, but they have been doing that. All the bears, you see a lot of stuff coming out. All the bears are talking it up, and then I guess they will claim it. You can guarantee they will claim it if they're right, but they can't be right if they've been talking about it for 6 months. In the markets, especially in the US, has appreciated 10%. So it's kind of a win-win scenario for these guys. But if they're trading it, then that's probably why they don't trade it either. So that's what I like to think. I know a few raging bears out there which come about and say, look, we called it right last time, but I do know between last time and this time, they've got it wrong a hell of a lot too. So you would never know that. Let's, rather than me rant and rave, let's just take a look at... So CAN was the one that's kicked off. We got onto that 2 days ago. Yeah, with that push up through 124. Let's just go through. So 123, nice little entry. That chart look, the weekly looks fantastic. You can look at that on the weekly. That's just grinding high. I'm expecting that to power through 150. And you can see with the volume increase the last couple of days, not a lot, but that's a nice little stock that's holding higher lows, looking very positive. They're doing great things too. So we're just seeing that buyers starting to step up to the plate, really jumping into that. Just see if they can power it through that 150 high into new highs, and then we'll see what we do from there. What was the other one we're looking at? TAW is looking good too. That's just punched up in that 29, which was touched before. But you can see that volume increase the last 3 days on this move up has really started to bring in some more volume. So some really buying strength in there. The buyers are really starting to chew up all that selling. What do we call it? Supply. So really starting to chew it up and push that market higher. So we want to see that punch up through 29. We just go to a weekly. Punch up through 29. I'm expecting that somewhere around that 35 to 40 mark. Potential. If I got that up a bit higher. Yeah, around that, up towards that 37.5 to 40 mark. So just around there for potential. We just want to see how it reacts up there. We've got a partial exit. It's not booked in or anything. Not a hard and fast, but it's just a zone that we find that there might be some selling. We might get a bit of reaction up there. You might find that there's a bit of profit taking. And people who have gone long, just people who have bought it and pushed this market higher just to start easing out of and just booking some of those gains. But we'll see. It could just extend that and trade straight up to that 45 zone. So we'll see how that goes. Looking good so far. Up 12% today. I can't remember else. Qantas. Now, this is the one I'll have a bit of a chat about. We'll make that on the bigger chart. We'll start off with this. The other alerts we've got, before we go, is AUB. That's looking messy here. I'd rather see it punch up and just get a chance to take out that at break even more than anything else. That structure does look okay. If you look at the weekly, it's had that grind high, but it's just really choppy. Done a bit of volume today. Nearly a mil. Not a lot for some of you traders out there, but for me, I don't mind it. I like the ones with got some good probability. It's a good potential for volatility. Volatility is good as a trader. I know some people might not like it, but I do like it. I like it because when you tend to get it right, you get it right quick, and it just gives you opportunity when a bit of a heads up when you don't get it right quick. And there's no volatility, maybe you just take it off. It gives you a good idea that there's no buyers starting to step up to the plate and willing to soak up any of that selling pressure. But this one, yeah, just doesn't look the greatest. Just the last few days of price action, there could be something coming in the way of news. We don't know, but it just looks like the way that's it grind up looked great. That pullback you'd expect to be a bit more contained. Instead, it's just gone bang, bang, bang. So not looking the best at the moment. CL1 was another one. It was looking great yesterday. We had a good positive day yesterday, and then they've come out with some news today. I didn't see it as too negative. They're growing, but I think the growth that they were anticipating, they didn't quite hit their targets there, and I think people are punishing it for that more than anything else. Trend is still looking up, still looking good. That might get some buyers coming to the market and just pick it up from here. We don't know how that's going to go, but we're just below break even, so we're looking great yesterday, and just below break even now. All right, so that's probably about it from us on what we've got running. Well, the last one's probably MGE. MGE at 280, we bought it at 280. That structure's still looking quite positive, and that's exposure to the US, so expect that. Could just keep grinding high. It's a slow mover, this one, I'd say. But it could pick up a bit of steam. But that structure is, you can see there was sellers coming in here, and it's getting soaked up through here with the buyers, and they're building the higher lows, so they're stepping into the price at higher levels, slightly higher levels, just to soak up that selling pressure and the selling supply, like we talked about before, supply demand. So I think quite a few people put on the sidelines and ready to jump back in, and that's what they're starting to do, holding this higher low in here, and then we broke out through 280. Like to buy it through 280, and then we're probably just coming to test that breakout zone, and then you'll get a few more buyers step up to the plate who potentially have missed it, and then just probably that price just to work its way back up towards that 3 zone, 295. We'll see how that one goes. Now, what we want to talk about, before I kick it on, any questions there? TAW looking great. If no, what I'll start off with is Qantas. So what we've talked about with Qantas is, just look at the longer term, even going back to the monthly. All right. So we know there's a key resistance up at this $6 zone. And that was a key level. And you can see this, we marked it all up. You probably, if you go back to the recent alerts or the previous alerts we've had on Qantas, you'll see pretty much the reasoning why we were looking to go short. Now, the good thing is, and this is what everyone's, I guess you've got to realize, is that your entries are really important. It's really important from a risk management point of view too. Risk management in that if you don't see your entry set up, you don't just sell it off what we say is sit on the offer. If you sit on the offer, meanings you just put in your sell. I want to sell it up at say 590. For instance, I'm just going to sit on there, and when it comes up, it'll trigger my entry, and I'm ready. You could be buying into a hell of a selling into a strong market when you just sit on the offer. Nothing's proven. Basically, when it just comes up and nabs you, nothing's proven. Then, and that's why I don't like doing it. Yeah, I'm a really big believer, and I think anyone that's been following for a while, the chats we do, the streams, you have to have an entry set up. You don't just sit on the offer, sit on the bid, because it's got a really good support zone, or it's a really good resistance zone. It's touched here before. I know we talked it up a bit, as in it did wash it out slightly here. It's a key resistance around that $6 mark. You had a little washout, then you had this sell-off, but this is still holding higher lows. We had potentially at this stage, I don't know if you remember. Does anyone remember the alerts? I'll try and mark it up. I just want to go through it from start to finish, just so you understand where we're coming from. Qantas, here we go. Now, at this stage here, what we're looking for, our entry would have been quite nice if it pushed down, just down below this low at 550. So what we were looking for here, if we just take that off actually, what we're looking for at that stage, before we get these sort of candles here, was it for it to push down from here. And then you've got your lower high, you've got your washout, you're at a key level, and we're anticipating there's quite a lot of fuel that's brought the market up. A lot of energy, a lot of buyers in there that have locked it in, really are going to potentially be that selling pressure as they tend to lock it in. As we get probably the key level, we would have come in, the first issue would have been around that 520 mark, but then at least we've got something up our sleeve at that stage if we did trade down at 520. But that was the idea. You've got this push up here, extended move up, and remember on the weekly we had a move up, nice contraction, and we had a move all the way up to 6. So that's your 2 legs up to $6, and then we're just looking for weakness coming to the market. Now that didn't play out at all that way, and it kept holding these higher lows, and that to us, you can see that there. It's quite clear now. At that stage it wasn't, but that's where your entry can really keep you out of trouble, rather than just sitting on the offer, selling it, and then we're going to get stopped. We probably would have been stopped out now and getting a loss for no real reason, which is just going to kill your stats. We want to see that shoulder trade as sellers are coming into market. So we want other sellers to prove that we're going to be right, and it wasn't proven. They just were getting soaked up. The buying pressure was really strong, buying back up into this zone. So at this stage, it was yesterday, you can see it just kicked up through that little inside level there, and for me that is turned around as you flip it over and you look at, okay, all these sellers that may have been sitting on the offer, just selling in this pressure, looking for that to roll over, because we're at key resistance. They haven't really planned out their trade correctly. There's quite a few people in there, and we know that there was quite a few retail traders stacked up on the short side. I think when we're talking stocks, 50-50 is pretty much a potential for a short squeeze. So it's 50% buyers, 50% sellers. It's different in the currency markets. You probably want, 65% stacked up on the on the short side. But it wasn't. It was pretty much 50-50. So that's quite good for a stock. So we saw that as a really high potential of a short squeeze. And that's pretty much the reason why we've bought it yesterday. Our risk is just below this low at 565. You're not risking too much to be proven right. And today it's just blown up through that key resistance zone. Now, it'll be interesting to see how far it goes on from here. But I think that's what that's going to do, is once it's proven it can get up through there, it's going to drag in a few more buyers. And there's quite a few people who are selling it in here that may have to chase their tail and chase it back up as well. But we'll just see. Does everyone understand where we're coming from just on Qantas? I thought I'd bring that up today, just so you can understand why we flipped over from thinking it was a short to really just reassessing and going long. And that's the beauty of, and that's what trading's all about. You don't, like we say, sitting on the fence rather than, I know everyone likes to say, get off the fence. You're either going to sell it or you're going to buy it. You don't have to until it proves itself. I'm happy just to sit on the fence and watch it and change my mind as much as I want. Does that make sense, guys? All right. No, it might take a bit of time just to catch up, but what I want to chat about quickly now, and before we get into it too much, is WGX. Oh yeah, Alan. Hope you're doing well. WGX is the next one. Now, we took a bit of a knock on this one, which is a bit of a bummer. But I just thought I'd go through, even though it was a loss, just go through. It's easy in hindsight, obviously. Why it's probably proven to be a bit of a... it stands out a bit clearer now why it was a short trade. Well, potentially. It may just turn here. It may wash out this zone and just bang, up she goes again. We don't know, but just a few things that we could have easily just closed out a bit quicker rather than just wait till it hit, what was it, 182 yesterday. Traded 182. I mean, this could nab us on the lay down to 180, and then bum, up she goes through 210, and away you go. We don't know what's going to happen now, but there's something to be said about just taking note of the price action, what's happening, and the levels, and it gives you the opportunity. If you add all those together, it's a really good way to get out a bit earlier, to really tighten up your stops. So what we're looking at is key reversal zones or key reversal indicators, and key reversal. It's got to be put in context to what's happening with your price structure as well. What we might actually do down the track, we might actually do another, just on technical patterns, another little live stream, just talk more in depth. Might see if Davin can get on as well, because he's really good at explaining these sorts of things. Yeah, it's just a minor gap from here. How you going, Helen? Hope you're well. So let's just draw that up then. Westgold. I had higher hopes for Westgold, and what was the other one? DCN that we had. I don't even know where that's trading at the moment. Yeah, so that's rolled over a bit more. I think we did pretty well on our exit on that one. It just proved itself. Sorry, it couldn't prove itself, so that's not too bad, but now we'll see. What was the other one? I had WGX. Alright, so we'll draw that up. So you can see, just noting what's happened in the past, you've got, I like to say that's a key resistance. See, it's touched up at that high. It's had a good pullback, and it blasted up and just washed out. But it couldn't close above that. Excuse me, that level. Couldn't close above that level at 270. It sort of punched up $3, and then it closed up for the session, but it was still below that level, that high. So really, that's just a washout in my book. And you can see the next couple of days, it's opened lower, pushed up, and it's opened where it closed. A bit of a sell-off. So you had a couple of red days there. It's not looking good. And when you had this type of price action, it's chopped around through there, I'd be inclined with after that washout, and that's your little minor double top there, that it's going to blast through that 220. So you can see that's got a bit of a history of probably haven't really seen it too many other places, but it has the potential just to wash it out and roll over. And that's what I'm seeing just here. Once we saw that, we were long from... We were long from about 204, I think. We're long from here, just below that level, and we got pretty much on the day we got entered, that was the high. So if you just back it up a little bit, you can see this day here, that little candle there. Again, it was pretty much the same thing. It's washed out through the highs, knowing that it's traded right up to that key level at 215. That was a resistance zone as well. So you had this, if you look at it from action legs, you had this big action leg down, that little pop up, and that's led to another big action leg down. And what we've done is just retraced, and we've just washed out that level at say 205, washed it out, traded to 215, and then settled below that for the end of the session. So that's not a great sign. Too many things adding up, and that's a key level at 215. And then we've got these couple of red days, so we could have easily tightened up our risk quite a bit. That's a key reversal type of sign. I like seeing those washouts I like them if it's in my favour, but I don't like to see them if they happen when you're long, you know, and it's potentially a sign. It's a bit of a heads up that the market could be rolling over. So we could have tightened up rather than had our stop below, you know, below this level, which I think is technically right, because there's no reason to say this can't chop around here and then bang, off she goes. But taking into account what's happening with gold as well, yeah, we could have tightened up on that entry, on that exit there. And it's the same to tighten up and using this sort of strategy when you get these type of signs in conjunction with what's happening on the price action. You know, if you're up to near a key level and we're getting a bit, you know, you can see the divergence there as well. If you look at that, I mean, that's not something we take a note of, but we know that you've got this little pop up, you've got a bit of divergence in this move up. It's not looking the best. So we could have easily just tightened up the stop below that little level, or just this inside minor level, which would take out, it's probably saved us about, could have saved us at least 10 cents, I'd say, around 10 cents. So that's one way of just putting together. And also if you look at what we've got there, that little rising support, it's just breaking down, so they all sort of match up together. You think, okay, we're coming down. It's spinning top, yeah, it is. It's a change of mind. It can lead to, generally it's going to lead to selling, because it's really a fast way to get out. And this is how, you know, once you get really, I guess, you're improving your trading, you're looking for these little reasons why. It's just a way to improve your trading overall. And in essence, once you get the price action, you get the price structure, where however you trade, and you're getting some good results, a lot of the times to improve a lot more is to just tighten up your exits. And it also is the same. If we had this price action up here at 265 and we were long from 205 and we had this type of price action, it's a great way to really tighten up your stops on your partial exits potentially, or your profits as well, your profit taking. It's not just to exit a market. So what you're trying to do is, when you get it right, the market's heading higher and you're trying to take as much out of that trade, that leg up, as you can. And you're trying to really refine those exits. Your major swing levels are obviously down here, and it is, you know, just putting your stop below this major level. So really it's popped up. Slip of the tongue there. It's popped up. So our key level is just, you know, that 182 below 185. And that's a key little swing level. We are proving wrong. So this may pop up, may have given us a better exit there, but it may actually have a nice deep correction, and we may get sort of a retest of maybe 160, or these lows down at 150, a bit more of a sell-off in gold. US just keeps on rallying, so there's a few things that could lead to further selling in this market. But I think it's a nice little way. Just, you've got to take note of what's happening overall, and just looking for those areas. Just really try to tighten up your risk, and I think that improves your stats quite a bit. I hope that makes a bit of sense, guys, what I was trying to explain then. And say, just look at, as another example, if you're short in this market, just look at this zone here. It's a very, and sometimes it's going to be, it could be the wrong thing to do, but sometimes it's really going to help tighten up those losses. And I reckon the way I've got it in my head and the way I think of it, when you're right, and you'll know it pretty quickly. You don't really get much of an opportunity when you've got your analysis is really good and you pick a prime target. They kick off fast, and they don't spend much time thinking about it. You know, whereas this one sort of popped up, it's had a good pop up, and you go, oh look, we're in for it now. We've got up to 215, but it's come right into a resistance zone, settled below the previous you know, that high at 206, I think it was. That's not a good sign. That's not a strong market. That's not ideal of a strong market, especially after what we're seeing, you know, all this other price action too, and, you know, all these other things adding up. But yeah, if you're looking at just this zone, if you happen to be potentially short from here, you saw this market down, it's popped up, and then you started seeing weakness, and you tend to, even if you shorted it just through here, for instance, your risk was up there, you're riding it down here. This little move down, when you know that you're starting to get extended, you can see that on the stochastics. It's had a good sell-off down here. We're starting to get the buyers edging into the market. A bit more buying pressure in there. You've got this move down. It's popped up. You would have expected it from here, potentially, to keep going down if it was going to be weak. So you're adding it to the fact that you've got one move down, two moves down. You're potentially at the end of this leg down, and you saw this. You could have really tightened up your stop just above there. and just really to tighten it up and lock in some more gains rather than just let it, get you out. Say it's not a lot, but sometimes all that type of thing can really add into your profits or eat away at profits potentially, and it's really a good way to just tighten up your trading, I guess. All right, so that's just a little spill on WGX and what we sort of saw there. We'll be looking at it a bit more. Might start, once we find some more examples. I'm just looking for one now. And a lot of the time it's after we call it a lower low. So you've got, after key levels, you've got key price action structures. This is a little double top with a retest, and it's just happened to pop up through. The second daily candle down is a good way just to take it out, because you can always re-enter. If you're wrong and it starts building again, you just re-enter. If it starts looking good again, you just re-enter. But when it continues down without you, and you've taken a bit more loss than what you wanted to, or what you could have, just by using that tactic just to tighten things up a bit, then it's really going to improve your stats. All right, so let's get into, if there's anything else you want to take a look at, chuck it into the chat. Any codes you want to take a quick look at and see what it's doing. I'll give you a bit of an opinion on it. I've always got an opinion on everything, so look at that CL1. That's back up to where we got in, so it's had that bit of a washout on the open, which is interesting. It's what do they say? Your amateurs open the market, your pros close it. It could be a bit of a case of that's a big washout of after that move up yesterday. This is CL1. The news is still good. It's still growing. It's not fundamentally a bad stock. It's doing well. It's just like, we said we're going to put on 1,000 customers. We put on 900, and people sell it off thinking something's not right. Yet you got to look at the overall picture. It is looking good. So we could be seeing that a bit on CL1. It could be just rallying back into the close, and then we get another good day tomorrow and just continue its way higher. The price action is still there. Nothing's proven itself just yet. Just a bit of a reaction this morning to the news. All right, BKL, let's take a look at that. Just seeing where are we on CAN. I want to see that. Let's get back up there, CAN. Can you do it? AUB, yeah, still a mess. APT. This is another one we like. APT was a nice little, we've had this before, but it was under a different code name. If we just go over there, it's looking good. It did a fair bit of nothing through there. I think that's when it changed names. So we bought it up here and we sold it when it changed names, somewhere around the, was it $3 mark? And we missed all this. I mean, I did take my eye off the ball, to be honest. It could have been a nice little re-entry back through here. But look at that price structure. It's had a leg up. It consolidate. This is great when you see this type of price action. So just remember that when you have that strong move up, if you're expecting a deep correction and you get these sort of candles when it's not selling off and it's holding up there, look for a continuation of that move up. And that's what it did over 3 days. Just popped up. And then you've got this washout. You've got lower lows, a little lower high here, lower low. So that seller's taken the opportunity just to get out of this move, whether they bought it here or bought it up here. The late buyers maybe just exiting out of that market, but the trend is still up. It's still, your anchor to this little level is, this move up is just under here, say around that 370 mark. We're still getting buyers starting to step up to the plate, but I just wanted to see and start popping up through 440, and I'd be happy to buy that. Maybe not so much today, but it's something we're just going to keep an eye on. If it trades 410, I'd rather just reassess it. So anyway, enough of my rambling. BKL, let's have a look at that. All right. I think this is coming to a point where maybe something's happening, and it's mainly just after that week. Well, it was a few weeks ago now. 4 or 5 weeks ago, 6 weeks ago. That green candle there. Let's just drag that in a bit more price action. What do you think of this one, Helen? Are you looking at this? I'm not that positive on it just yet, but Blackmore's. I know Dav loved it through up here. He was trading in and out of that the whole time. when it's pushed up here, and he did really well. Big proponent of that, but at the moment, I think there's a few signs heading show me where it could still have a bit of downside to it. You look at, this is the weekly chart, don't forget. Oh, so that's the weekly, Helen, sorry. Are you looking at intraday? Okay, so you just want a bit of a pullback, somewhere around, was it $100? So that could work out nicely. I mean, everyone knows the way my style of trading. I want to see that higher low build. Until I see that, this thing could just continue its way down because it's got a lot of room to move. It's a $100 stock, $120 stock, isn't it? So it could easily just drift its way down. It could come all the way back down to $20, $30. Yeah, no reason why it can't. So to buy, I mean, you can see that if we get a higher low just in here, yeah, exactly. So if we can get a higher low in here, I don't like the fact that it's had a really strong move up. So there's buyers are starting to push it up, but that selling supply is still there. There's maybe an overhang. There's been quite a bit that's come out from this move up. Don't forget you've had quite a bit of buying through there, and that was over 2015 towards the end of 2016. Then we spent the next year just grinding our way higher. Lower. So anyone that held it, say you bought it in here, you were sitting on profit, probably going to about break even on this move if you bought it, say here, looking at profits again, and then you're looking at those profits coming back down and just evaporating, and you're getting these lower highs. So there's quite a bit of, buying that's been pushed back out of this market and put back on the sidelines as potential supply to come back into the market. So we'll just have to see how it goes. But really, I think just now, off that weekly chart, even in here, if you picked it around that $100 mark, you can see it's just pushed down, popped back up again. So this move up is actually quite good. Does anyone see why? Because you haven't really got these, this move down. You've got a good contraction. It's about 60% retracement. Another move down, about 50% there. Another move down. Then we spent a lot of time just doing nothing. We washed out down below, so we've got this move down. It's pretty much retraced all of that right back to 120. So that's not a bad sign. It's a good bit of a heads up to start taking note. And we're probably coming to the point where there's been quite a bit of washout in this market, in this stock. But really, I would love to see, if I can just draw it up, just so if we can draw it up here, we'll draw it in a different color. We'll try to change my colors a bit. So we've had this type of price action here. Whoop. Let's push back down, and then we've got this push back up. No, it's not. It's way down here, isn't it? No, that's right. It's up here. So that's that line there, if that makes sense. That resistance line, that's a $100 mark through here. We've popped up to this level. We're still contracting lower. Nothing's confirmed. I'd love to see that just pop out, and then I'd love to see this type of price action, as we grind our way higher, and you can see we get to this sort of oversold mark, yet we're not back down to that these previous lows, and we start holding a higher low. That would be ideal, and I think that could lead us to some really healthy gains. It could be the start of a nice strong leg up where we could attack right back up to, $220 a share. Yeah, no, exactly. So that a few weeks ago was really the key for me on the longer term charts. Anyway, it was just key for, okay, heads up, something's happening, but it hasn't played out just yet. It is in a good position to really start that selling, come back into the market, and anyone that's probably looking at it here, if they just get sick of holding it, they've held it longer term, it's doing nothing, they could just jump in the market and push it back down. But it's looking like this supply that's being pushed out back onto the sidelines, those buyers. So there's more supply to come back into the market. They're potentially looking to get back in and start to soak up that selling as the selling pressure decreases. All right, so let's just look at a daily. I haven't looked at a daily. The daily is a little bit messy for me. But yeah, it's just struggling. It could pop its way up. I'd love to see it pop up, through 120 to maybe 125, and then we start backing off, and then we start showing signs of holding a higher low. It'd be interesting either way. Anyway, any questions just on that, or is there something else you want to have a quick look at? Got anything else on the radar there, Helen, that you're looking at? I'm trying to think if we've got anything else on that we're looking at. Was there one? Fleetwood. I'll go over Fleetwood and just while we go, this is one that Dav likes, and this is a, to be honest, this is a little type of a price action that I've still got to get my head around. I still, only because it's not exactly my style, but it is a really good type of price action setup. If you know, a lot of the time, if you're following the alerts that we do, SHV, okay, we'll get into that. Let's just draw that. If you really keep an eye on the alerts that we do, you know that a lot of the times I like to see a move back, potentially like that. And I like setups like this, and you get this shoulder trade. It's like your head and shoulders, you can call it. I like to say shoulder. And I like the entries through there. You've got this 1, 2 legs down, and then you get this little inside high low to work from. And I love those type of setups. They really suit me well, suit my mentality as well, because that's that little extra step that buyers are stepping in. Sometimes it just doesn't work out that way. You get these moves down and then bang, it just off she goes, and you've got to be prepared for that. And that's what we've got here. Actually, if I draw that up a bit better, I'll get it in a bit closer. And that's the type of price action. Sometimes you're taking that step into the market prior to a bit extra confirmation, but you're still well and truly in that unknown. We'll just draw that up. Yep, I've got that. That's not what I wanted. This is FWD. So I reckon there's still a good chance that this is it's running out of steam here, and we've just popped our head above that. It's really only a minor level, but you can see we've had one leg down, a couple of days positivity, and then we've had that secondary move down. So we've got that little key lower high in here, just below 295, and we've had that good. The good thing we've seen is this washout. You can see it, and it's a reverse of WGX. So if you just looked at it purely from just an early trade, it's a lot more aggressive type of trading, but it is really good basis for what we look at supply demand, what's happening in the market, what the dynamics are between the buyers and the sellers. It's a really good setup, a nice strong setup, and if I can just go through and explain it. So if we look at it in context of what's going on, the market's moved higher, it's had a bit of a pullback. Put those sellers back on the sidelines, so some of the buyers back on the sidelines. They've jumped back in, it's pushed it to high, high, washed a few more out, put them back on the sidelines with some selling. And then we've had this little run up to, was it 330? And we've had a good pullback there. So that's really put a lot of people on the sidelines. I like these two legs. Remember, we've talked about this before. You get that secondary move lower. It's 1, 2. So we've had that good, it's a deep correction there. It's put a lot of people back on the sidelines. A lot of that supply ready to come back in. It's popped up. It's had that secondary move down, but these candles here in reverse, so it's washed out the previous low. It's closed above the first day, just in here. Closed above that support. Second day, it had another go at it. So that's a good little heads up that there's some buying stepping in. Some of that supply that has been put back on the sidelines is ready and coming back into the market. And you can see by the pressure too, a good pressure on the sell-off through here. Good pop back up, and the pressure's been back down again to oversold, but it can't get through these two little candles here. So there's a nice entry, we call it, like I said, a higher high too. So the second sort of daily candle, maybe on this third day, on this push up through potentially 280, is a good early entry that's off this price action that we're just struggling here, is a good little early entry that the market's going to pop up. We may be getting a bit extended up here, but we could easily just kick on right up to 330. If not, we might be the case that I tend to look at. We've had this little washout here, and we pop back up. We might be building that high low. And then, oh, that's not very good. And then off we go there. So that's tended what I look for. This is more of that aggressive entry. You've had that move down, pop back up, another strong move down, but it really can't get much further than the lows. We've had a couple of washout candles. You can see those rejections, the opposite to WGX of what we saw. The reverse for that, so it's a good heads up that potentially is a nice little buying in here, and we've got this little opportunity through here as a really, what we're trying to do is a front run of the people that are coming in a little bit later, or maybe a front run of these breakout traders through 295. Yet to be proven just yet, But if you did take that trade, for instance, your risk is quite low, it's quite minimal, and the theory behind it is that we've already put quite a few people back on the sidelines. The market is heading high. The MAs are still pointing up, and the weekly is a good, strong uptrend. So there's a lot of factors that have lined up to be able to use that type of aggressive entry. Yeah. Oh, SHV. All right, we'll take a look at that now. All right, so does that make sense there, guys? What we're just talking about on Fleetwood. So that's what we were talking about on WGX with this little washout here. It's just that reverse. So that there's a bit of a heads up. Well, we're not as strong as what we thought. There's been 1-2 legs up and we bought into it, potentially running up into a resistance zone. We've got that spike washout through the previous little minor high here, right up to another resistance zone. Finished below that previous high. Things are not looking good. Where it's the exact reverse on Fleetwood. On these two candles here, just struggling to take out that low. And that's just nice little heads up that buying's coming back into the market. All right, what did you talk about? The SHV. Anything anyone else wants to look at? Frank, if you're there, anything you want to take a look at? Any other codes? It could be a currency as well. Alan, anything you want to take a look at, mate, before we get into it? And faster 1001, faster. If there's anything you want to look at, just chuck it in the chat. We'll look at SHV. This is more of that. I'm guessing it's a weekly. You can see of that $4 level, it's a bit of a weekly washout too. I think there's still a bit of work for me. This is quite early on the weekly basis to be buying into SHV. Some good news, it looks like. Trading halt. Okay, what's the news on that? I'm guessing a capital raising, is it? Unless otherwise, screws around in trading halt session until the earlier commencement of normal trade Monday, the 9th of October. So a few days. That could come on tomorrow, though. Just be wary. Come on anytime between now and Monday by the looks of it. But Telstra. No worries. I'll look at Telstra in a second. Yeah, to me, this is not looking that great. I think it's got a lot of work to do before it kicks up on that weekly chart. The only thing I can see is it's a very minor thing. Telstra, no worries. Chairman resigned. Aussie US oil. Okay. Yeah, that's looking negative. I know a lot of people don't look at this, but just to get an overall balance of what could be happening, just looking at that monthly chart. I'm guessing you can all see let me just see if I can see it myself. Yep. It's probably not coming out that good, is it? I might as well just thicken it up a bit. Alright. So you can see SHV. Just on a monthly chart, you've got a few little things happening here, which doesn't lead me to believe it's too positive. I know it's a massive double top up there, but the market's pushed it all the way back down to pretty much where it started back in 2001, then pushed all the way back up again. It's come crashing down pretty much through 2015 and 16. Took out this little level, which is a key. That's you sort of had one leg up, contraction over a few months, and then bang, straight back up again to highs. And then we come all the way back down, broken that level. Pop back up, really struggled here to get much higher, and we're starting to come back down again. This price action, apart from it looks like it's ready to break through that that level there, and it could just could wash out that level, could do anything from there. It just doesn't look that positive to me. The only thing I don't mind is that this type of price action on the way down, it's not bad. It's this type of price action you get, and that's not a very, very weak market. It has worked its way down all the way back down to that support zone. So if we go over to a weekly, I think is that just below $8. Is that right? Yeah. So that's the price action there. That doesn't look too bad, and you can see the steepness of that sell-off from 1350 down. The grading of that sell-off. We'll just start. what we look at is, there we go. So you can see gradient from high to low is nothing like that. So that's a lot of selling's coming to the market. There's a lot of people taking their money off the table, and the buyers are sort of just stepping aside. They're not willing to hold it up at higher lows. The market's popped up quite a good little rebound, but then you've had this sell-off again from the highs at around $8, but it's coming into that support zone. So there's a few little things that could be holding up. A bear. Yeah, we put an alert out yesterday that we bought into Qantas, Frank. So it was probably sometime in the afternoon yesterday, probably the last alert actually. We got into that. I am a bit of a bear there. There's some that I just don't like. I like it to prove itself. So I'm not going to buy anything that's not going to prove itself to me. I'm seeing that key level. If I think this is going to hold up as a support zone where buyers are starting to, look to buy it again and look to step into the market. You can see that we've had a lot of buying up there. A lot of that has come back out. A lot of these buyers have been washed back out of the market, put back on the sidelines. So there is quite a bit of supply potentially ready. You just got to see that demand increase. You really just got to see that people are starting to step in. We're not seeing that yet. We know that there would be a lot of people back on the sidelines again, ready and raring to chase it back up. But it's not proven just yet. And off the weekly chart, this is a weekly, sort of the key levels at 525 for me. I want to see it at least up and test, and then you can see that, not really. Yeah, if we get up there, then we're starting to break out of that contraction, that lower, and we're starting to look, and then I'd expect buyers to start stepping up to the plate. It isn't well and truly oversold in the weekly, but I think it's got quite a bit more work to do, and that's your high right up here around that 520 to 25 mark. So yeah, it's still got quite a bit of work for me. Even on the daily chart, it hasn't done anything just yet. But yeah, I'm pretty much a bear on that one anyway. You got me, Helen. All right, what else did you have? Telstra. Telstra, I was a bear on this one, that's for sure. I wish I still was. So we had a short on this one, 430. And we took the last bit off around 360. So I did well on it, but I don't like Telstra. I think too many people pin their hopes on the dividends, but when the company itself is not doing that great, you just got to walk away from it. Who cares about dividends? I mean, pretty much the way you're going to make your money is if you, I don't want to get too much in depth of this, but it's traditionally a dividend darling, Telstra. But there's too much competition coming out for them. I don't think they're doing that well. They've changed CEOs a few times, I think, in the past. So it doesn't support, for me, it's not the makings of a good, that they're starting to build back up again. And you can see it here. We're not the only ones thinking that. They come out with their dividend, then bang, it's just gone south since then. I don't, if I remember, did their dividends match consensus? I don't think they did they? They came out a lot lower than expected. Was that right? Helen, do you know that? Anyway, so this here on Telstra, I wouldn't go anywhere near it right now as a buyer. And even selling, it's not set up to be a seller. And just remember, there's sort of a time and place. I don't like it. I think if I was going to touch this for a buyer, I want everyone else to do the hard work for me, the heavy lifting, and start to prove itself, to start to see that buyers are stepping up to the plate right here. The only people are buying that, I don't like to say, is the silly people, is just, they're buying it on the way down, potentially because they think it's at these prices, it's a good dividend stock, it's going to yield them good, but there's no reason why they can buy it here and it just head down to 330 and stay there for a year or two. Okay, still okay. All right. So you look at that longer term, that's had a good sell-off right from the beginning of 2015. It pushed up to, just below 680. Pushed down, made that lower high, and it's just been continuing the trend down. Grind its way back up, lower high, pushed it down, lower high, pushed it down, lower highs, pushed it down. So we're getting, even though we look like we're potentially in that leg down is getting a bit extended now, and you can see it on the stochastics here, so the pressure's been down quite a bit. Still no reason to buy it. There's nothing on the weekly to say to buy it. I don't see, go back to the monthly, there's no levels to be worried about. It could still head south. Weekly's down, daily's down. no reason at all to be any. I would step anywhere near this one. And again, I just wouldn't sell it. So that's why I mean, it would have been nice to hold. We took, I think we took a partial. It was here, I think, or maybe it was up here. So we sold at 430. We want to take it a partial somewhere here, or just here, around 390, and then we let the other half run, and we took it off at 360. About, I think it was somewhere on this day, and we're looking good at one stage, but then it's headed south again. It's still going lower. Would have been nice to keep that, you know, just to see how far it can go, because there's no real reason to buy it. It's just heading south. I think there's a lot of people, a lot of volume still to get out of this market, and people still do buy it, you know, buying a bit of a dip. They might have bought it through here for the dividend and they've got back out. People are holding for the dividend, maybe getting sick of it. I mean, if the market's going down and you bought it for a dividend, you're still going to lose. You know, there's no way around it. The only reason I'd attack dividend stocks for the pure reason of buying it for a dividend is if it's heading higher, if it's trending higher. But anyway, that's my little 2 bobs worth. But yeah, it's not looking great on that one there, Alan. What else we got here? Anything else you want to take a quick look at? The market's up only 8 at the moment. Any more news? No. So we're back up on CO1. It's had a bit of a choppy session, that. AUB is a bit of a way off break even for us. I think it was 13 something we got in on that. AUB 13.18, so that could easily trigger that today. Can holding at 134. We're content to hold that level at 134. You're not doing too much. What was the other one? Tor. That's content on the highs today. It's done a good little run up into the highs today. It'd be interesting to see, especially with Tor, if it can break up and hold above that 29, maybe at 30 coming into the close, or that it just holds up near these highs would be good. So I think that sets it up for tomorrow to have another extended day and just bang through 30. But we'll see how it goes. Alex, no worries, mate. All right. If there's nothing else you want to take a quick look at, we may call it a day there. We're just getting on the hour there. So, yeah, thanks very much for joining us, guys. It's been interesting. We'll be back in on Monday, same time, 12:30. For the Monday stream, we'll try to, again, look for something that's got some really solid fundamentals from that research report that we get through, and just see what that's what they're looking at and what they're following, and see anything takes our fancy, and we'll have a bit of a chat about that. Otherwise, we'll if there's anything you want to have a bit more in depth and look into some of the fundamentals and compare that to what the technicals are showing us, feel free to send us an email through to TradeSetup.com. Support at TradeSetup.com.au. Otherwise, we'll call it a day there. Thanks very much for joining us, guys. We'll see you again on Monday. Cheers, bye.